Hello guys, Ivan KVS here and welcome to Shark Numbers. In today's video, in one of my previous videos where I explained how to use Binance Futures, I briefly mentioned that I have developed my own custom trading strategy that works all the time. I'm not drawing anything on charts. There is no catch here. I'm going to share the strategy with you for free. I want you to know one specific difference of this strategy, how it's different from the majority of other strategies. This one is purely based on probability theory. In simple terms, it might bring you, let's say, 1% profit on each trade 99% of the time, 99 times out of 100, but it could also lead to a loss of 99% of your earnings one time out of 100. So if you want to be profitable using this strategy, you need to keep track of each of your trades. You need to create a spreadsheet. And let's say after making 20, 30 successful trades, you should probably take a pause and wait for that one unlucky trade to occur before continuing to trade. It might all sound mystical, but it's actually how life works. If you randomly bet on the market to go up every day, let's say at 8 o'clock in the morning, 300 for 365 days, you will be surprised to find that by the end of the year, almost exactly half of all of your predictions will be correct and half of them will be incorrect. The world is balanced and everything in the world is balanced as well. And the more I trade, the more I realize that. Enough talk. Let's jump straight into trading. Let me show you what I have and let me also place a couple of orders to show you how to make profits while trading futures. So without further ado, let's get rolling. This tutorial I'm using TradingView once again, and I'll be using Binance Futures to trade. If you want to do the same exact thing, feel free to use it. TradingView is a free platform and you can register in it. I think I have a referral code. Check out the code in the description. If you want to trade stocks, help yourself. It doesn't matter what asset you're going to trade, but you just want to make sure that you are able to trade in both directions, long and short, and make sure that hedge mode is enabled. If you use Binance, here's how you can enable the hedge mode. Just click on this single asset mode, move to position mode and hedge mode. So you are able to open both long and short positions at the same time. Otherwise, by default, Binance will, let's say if you open your short position, Binance will close it once you open your long position. So to be able to trade both directions at the same time, enable the hedge mode. Now I'm going to click on stop market. So a little bit about the strategy. First of all, why I picked this asset, I don't even know what it is. NAUSDT is a great pair because this asset went up by 17% and I know that it's extremely volatile. Volatility is all we need for this particular strategy. So it's a perfect example of an asset that is extremely volatile. We don't really care about liquidity if we don't use too much money, but if you are planning to utilize the strategy with large amounts, make sure that there is some liquidity. How much money am I going to make if I risk 10 USDT, the price goes up by 1.5% and I trade at 10x multiplier? I will make around 37.5%. So this is incorrect. I'm going to make 3.7 USDT roughly. This will be my stop loss. So basically the main idea is that this will be my plan A. If the price goes up here, I'm going to go long. If you place one order here and you place order over there, whichever line gets triggered first, this will be your first order. We'll open our long position first. So if that's the case and the price goes up, we're going to make 3.7%. This will happen. The probability for this scenario is 50%. If let's say we touch this border, the price goes up, it doesn't touch our exit point and goes down, and we hit this line, then we're going to place 30 USDT. We're going to open our short position. So here we're going to lose. Quick question for you guys. If we use 10 USDT here, we go long and the price goes up by 1.5%, but our multiplier is 66.6. How much money are we going to make? We're going to make 10 USDT. Why? Because 100 divided by 1.5 is roughly 66.66. And how much money are we going to lose if we go long here, but let's say the price goes down to this level and we trade with the multiplier and we trade at 66.66x. we're going to lose 20 USDT because we use a multiplier. So first, I'm going to explain the basic logic behind this strategy, and then I'll show you how to trade. These two lines work as trigger lines. Usually I place my first order, I call it plan A, at both of these lines. So whichever line gets triggered first, this will be my first scenario. So let's say for this first scenario, I'm going to use 10 USDT. I'm going to use 20x multiplier just to minimize risk, but you can use whatever you want. I'm going to use 10 USDT, and if the price goes up, I make profit. In case something goes wrong and the price retraces and touches this line, then I'm going to have my plan B. I'm going to add 30 USDT, and still I'm going to make profit, because here I will experience loss and here I will experience profit. So my profit will roughly be the same as if it would have been with plan A. And so I will repeat the same logic with plan C. So let's see, with either of these scenarios, whether it's scenario number 1 or scenario number 2 or scenario number 3, I'm going to make roughly the same amount in profit. And what is my chance for success? So let's see, with this first one, I have 50% chance to succeed. Plan B would be 25% chance, and plan C would be 12.5%. So my success rate is 87.5%. Most likely I'm going to make profit. I'm going to show you how to do it. But once again, if you trade often, you realize that those occasional unlucky moments happen, exactly as the probability theory suggests, which is why it's important to track your success rate. If you notice that you are successful and your trades are successful for an extended period of time, just take a break and wait for that. Keep track of the charts, run your technical analysis, and wait for that one unlucky moment before you continue trading once again. Probability theory is everything in trading, and the more you trade, the more you realize how mysterious this world is. All right, let me place 2 orders. I'm going to create one long order over here and one short order, and I'll show you how it works. Again, you can use stop market or you can use stop limit. I'll use stop market just to make it kind of simple. All right, so what's the price? 1.437 will be my entry point. Then I want to trigger my take profit limit order at this price. So this will be my trigger for the take profit order, and take profit will be placed at 1.459. If it's a successful trade, I want to close it as quickly as possible, so I use last. But for stop loss, I don't want to hit stop loss as quickly as possible. I usually choose this option. Also, it helps you kind of like in case there is slippage or market crashes or something, it helps you minimize your loss, if it makes sense. 1.395. All right, so, and I'm gonna use, I said 10 USD. All right, quickly exit PNL 3. If I lose 6. Let's go. Yeah, so the position is open now. This one is no longer relevant. I'm going to cancel. Let me just drag it a little bit. Open long, close short. So I'm going to remove this order, and I'm going to get ready for plan B. So let me quickly create an order for plan B, and then I will fix the drawings. I have 50% of closing it at a profit, but in case this reverses and I hit this border, I'm going to go long, and I'm going to place 30 USDT in hopes of closing this order at a profit and losing a little bit with my short position. All right, so 1.437. 1.459, and my stop loss will be 1.395. All right, so I'm using 30 USDT. This will be my exit PNL. So I'm still gonna make profit even if my short position gets closed at a loss. But again, we don't want to open it right now, which is why we use stop market. All right, so I'm gonna click on open long, and this position is now ready to be open. But again, we're not going to open it unless we hit this border. So let me quickly fix the drawings. All right, guys, the drawings are fixed. If you did not understand what we did, and I hope it's not the case, I'm going to repeat once again. So we have 2 of these white lines, which is kind of our starting point for plan A. And we see how the price develops. Our first order is long. If we touch this border first, we open our long position first. If we touch that border, the other border first, then our short position position is going to be opened first. Because the price went down, we begin with our plan A. Our plan A is that we go short from here and we expect to exit our position at this price, 1.395. So it doesn't matter what multiplier you use. Again, a lot depends on your risk tolerance and whatever your idea is. I used 20x multiplier is because I feel comfortable using 10x or 20x multiplier, and also for the sake of this tutorial, it doesn't really matter what multiplier we're going to be using. So I put in 10 USDT, and so because I used 20x multiplier, my actual profit is going to be $3, $4. If you max it out to 100% by using, let's say, 66.66x multiplier, then, by putting 10 USDT here, you can make 10 USDT on top of what you're risking. But again, a lot depends on your risk tolerance. It doesn't really matter. What matters is I'm going to be profitable here, and we have 50% chance to succeed. So our success rate is 50-50. In which case, if something like this happens and the price goes back up, we open our long position with hopes to close it at a profit at this price, 1.459. It's a 25% chance that this scenario might happen. After touching this border, we touch this border and then go all the way up to the top. So with two of these orders, we have 75% chance of succeeding and making profit. But let's say something goes wrong and the price continues falling down. If this scenario happens, then we going to add a little bit more money. We will add 60 more USDT, and we will still be profitable if the price goes all the way down to 1.395. So here we put 10 USDT, here we put 30 USDT. All right, in which case we make profit here and we lose our other order with our short position. As I mentioned earlier, even though it looks like an extremely amazing strategy, which it is, if you're disciplined, if you keep track of all the data, if you play with volatile assets, still there is a tiny chance that you may lose, and when you lose big. All right, guys, it's been a while. We're almost there. The 1000x indicator tells me that it looks like the bearish cycle will continue, will prevail, and it looks like plan A is going to be executed. If you want to learn more about the 1000x indicator, please check out the link in the description. Let's wait and see if we're actually going to hit our target. This token was definitely pumped artificially, I can tell you, and right now there is a massive pressure coming from the bears, so most likely we are going to hit plan A, this first scenario. If you see something gets frozen like this, it means we're going to see a massive dump to the bottom. All right, we're finally done. My position is closed. This first scenario worked, but it took me a little bit of time to wait. I got a little bit tired filming this. But anyway, don't forget to cancel your stop market order once everything is completed. I happen to forget to cancel my stop market and stop limit orders a couple of times. And don't forget to do so. Make sure you can click on this cancel all, or you can cancel a specific order. I'm going to show you how this button works. I canceled everything that's been open. I hope you enjoyed this video. One more thing I'd like to mention before I go, I have a private Telegram channel where I share my signals and thoughts with the most loyal of you. It's 100% free for now. You can be added to the private channel if you leave your username, your Telegram username, in the comment section. Feel free to do so. I hope you enjoyed this video. Check out all the links in the description. I'll talk to you soon. Ivan KB out.